Welcome back to the channel. All right, today we are going to talk about what is happening in the market. All right, we're going to start off with Bitcoin, go over some Glassnode charts. It's going to be very interesting. Basically, you are feeling now what it feels like to be in the crypto market. I mean, if you'd been in this for a little bit of time, you just got in recently, you experienced nothing but euphoria. That is what a majority of market holders were feeling throughout this entire rise. Even these drops were slightly concerning, but they were not that concerning. And everyone was doing pretty good until we reached up here. Now with the price sitting at 37,700, a lot of people are in that zone between, is this done? Is the drop over? Are we recovering? It doesn't look like we're recovering. What's going on? So we're going to try to clear up some concerns today. And also we're going to try to be very realistic about what's happening in the market. That's the most important thing. You got to be realistic about these things. So we're looking at the 4-hour chart right now. And what we're really seeing here is we're seeing that we had a pretty significant downtrend, as you're all aware. And in this downtrend, the price roughly from a top of about 60K, a little bit higher than that actually, we were at almost 65K. The price dropped, it stabilized for a while, and then Elon Musk's tweet came out, that dumped things a little bit, and then we had just cascading liquidations that led to a very long drop. We probably had whales dumping to buy back lower. We did not probably have that, we definitely had that. There was a lot of accumulation from big numbers going on here, and we're going to see that in Glassnode. And what we're seeing now is that we have broken this trend. Now, even though we've broken this downward trend, we are still not out of the woods because we really need to see the price come up and break this key 45,000 level. Now, why is this level key? Well, because this is about median of this trend line. This is from where this trend line goes to where the price was below it. This is about halfway. Right? A little bit more than halfway. That is a good indication that this is starting to really go in an uptrend. Now, the other thing is you look on the right-hand side and we see our volume profile, and you see that the volume profile really is, this is where we really have a big significant chunk of volume. And right now we are sitting right at this big peak. This has been an area that had major volume because of the fact that if we scroll back, we hit a top here at around 42,000, and then we consolidated and we traded quite a bit in between this very specific zone. So because we traded for a while in this specific zone as a top and then broke out of it, you see the volume profile represents that. And right now we are sitting right within this volume profile. We are sitting right here and it's right at the top. So if we break above this and we start hitting we definitely will start hitting resistance at around the 46 to 47,000 level. But once we're trading above 40K and we're putting in some more volume on this in this volume profile, what I want to see us do, hang on, let me get rid of this so you can see it a little bit better. What I want to see us do is break out of this area. This is where we had a ton of volume. We've put in a lot more volume there now during the drop. We have definitely hit a bottom right at where this volume profile ended. And you'll see below this, we don't have nearly as much support. And that's why a drop down to 26 to 25,000 is possible if we fall bearish and go below this. So we're not completely out of the woods. To be out of the woods and to really build confidence, I need to see Bitcoin start pushing above 44K. Once it's above 44K, we can expect resistance at the 45 to 46,000 level, but the key will really be if we see something like this. If we see the peak up here at around 46K and then drop back down to like 41 and trade sideways here for a while, this will be much, much more confidence building. When we're still down here at 37, 38, I don't have a ton of confidence that this recovery is over yet. So I stay ready for anything else because anything could happen. Now, the best sign we could see in the short term, all right, so in the next day or two, right? I ideally wanted us to see 44 to 45,000 by now. Since we're not there yet and we're still trading in this range, it is entirely possible that we take another drop back down to around 34,000. That's very possible because look where we are now. Our drop to 34,000 puts us right on top of this trend line, that even 33,000. By hitting this trend line, there is always the chance that we bounce off and keep moving up. This is a very common thing to happen in these types of recoveries. And you'll see if something like this happens, well, what do we end up doing? We actually end up putting in another trend. We start putting in a symmetrical triangle. If this happens, this symmetrical triangle would look something like that. Right? You'll see that when I draw that in, the bottom here hits perfectly on the triangle, and then a breakout happens at a pretty significant point of the apex. Something like that is very possible to happen. So we will keep this hidden, and we can always go back to this later. We'll keep this triangle on the books. So basically something like this is possible. And if we have a bounce off here, that is a strong indication that we have flipped this downtrend into support. We have had zero confirmation on this yet. There's been no confirmation. The best thing that's happened thus far is that we have broken the trend. Now, breaking the trend and holding above the trend are two different things. If we see a drop and we go right back below this trend, and then we hit here, this won't be the worst thing as long as we put in a higher low. Right now, our first low was right around 30K. Our second low was around 31K. So if we put in 31.8 or 32K and we still hit around this trend line, that's not bad. If we have a drop and we break below either of these prior lows, well, then that is indicating that this downtrend is still in play. So without this being confirmed, right now, you just have to be very cautious. I mean, this could be a terrific buying opportunity if things turn around, or it could be a premature buying opportunity. I think in the long term, this is going to be a great buying opportunity. But in the short term, getting a buy opportunity at 25K is not out of the question. Maybe even 26, 27, not out of the question, right? Especially because one thing that you see that's very indicative is that the first time we came below these levels, and keep in mind, we're looking at the hourly chart, so we're getting a very narrow time frame here. The first thing you see here is that these were very big wicks. The next time we came down, it was also a pretty big wick starting at 33. But then we dropped below that and we did not wick up. So that shows during this drop, we had a lot less strength. We also did not see a quick move up, meaning that there wasn't massive immediate buying at these levels. There was a lot of buying because we did have a lot of trading happen here, but there was nothing massive. So there was lower volume trading that led to this uptrend. And now we're having the same thing. We're having somewhat lower volume trading at this downtrend. We have not seen a spike of buy volume come back in yet. We have seen small amounts of buying at these lower levels. Now, this could be indicative of two things. This could be, number one, that the market is still in fear, which I personally think that it is. To some degree, there's a lot of people still very scared, and there's a lot of people probably sitting in stable coins and cash right now. There are also a lot of people buying and keeping the price low. They're not moving the market. So you could have Grayscale, you could have institutions, you could have a lot of major players. And remember, it doesn't have to just be institutions, because institutions have people behind them that are very wealthy. And those people, if they're making personal purchases and they're using a custodian like Coinbase Custody or something like that to make their purchases, then they are not making purchases in big chunks. They're doing two things. They are either buying on the market and keeping the price low, or they might even be buying OTC, which means they could buy a significant amount of Bitcoin at 37, 38K, and we would never see it on the order books. It would just happen over the counter. Now, that's also a big possibility, so keep that in mind. All right, so for right now, short term, what I'm looking for is I'm looking for two things. Either we break out above this level and above 40K. 40K is the first hurdle that we need to break. I want to see a significant break, and I want to go back to these levels here. Okay, these levels here were anywhere from 42 to 44 or 40 to 42,000. I want to see those first. That is the first step that'll put in a further uptrend. You'll see right now that if we just look at things as they are and we put in that symmetrical triangle with what we are looking at, if we're looking at this trend and we put this symmetrical triangle back in, this is very similar to the one we were just looking at. So you know what, instead of redrawing this, let's go ahead and put back the symmetrical triangle that we drew. So if we look at this symmetrical triangle, this is the main thing I'm looking at now. Do we come back and test the bottom of this triangle? Do we move up above it? And what we'll do to make this a little more visible is we'll take the trend line and we will turn that into a dotted line and we will give it a different color. So now what you can see is, you can see this much more clearly. We have this trend. We want to see, do we hold it? Do we stay within the symmetrical triangle and do we break out? Now with this, it's a very big possibility that we keep trading within it and going sideways for a while with setting in higher lows and lower highs. And if we do that, then we are going to be looking for a breakout somewhere around here. That's either going to be a breakout or a breakdown, and this is somewhere between May 27th and May 29th. So this weekend, basically Memorial Day weekend. Weekends are not particularly bullish, so if we have a downtrend here, it wouldn't shock me, even if we keep going sideways a bit, and then by May 27th, May 29, we hit the bottom of this triangle, and then we don't break out until like maybe late on the 29th, or we just extend this. You know, there's no reason that we can't just extend this further. So we have to keep an eye on this. This, I think, is the most important thing we're looking at right now, and this line of support at the bottom, this uptrend, is what really needs to be held. Okay, now we're going to look at a couple of other things on the chart. All right, these are the main patterns on the chart to look at. They're the most important ones. They really are. There's not a whole lot else that we are looking at right now, but I'm going to go to another view. I want to show you guys the log chart, all right? And then we're going to go back and look at the Fibonacci's, then we're going to switch over to Glassnode. So keep tuned in. This is going to be a lot of information and hopefully pretty quickly. We're already at 10 minutes, so let's keep moving, all right? The next thing we're going to do is we're going to get rid of this trend line here. Let's move this out of the way. We'll hide this line so we have it for later, and we're going to switch to the log chart. Now, if you're not familiar with the log chart, when you're looking at exponential assets like Bitcoin, you want to look at a log chart. The log chart is going to stabilize the moves to values that match in percentage. Now, what that means is, so look, I want you to see the difference, all right? If we look at this chart, and we are looking at it on the daily right now, okay? And if I take this chart, hang on just a second, and we move it here, you'll see that we're looking at a pretty big time frame, all right? We're going all the way back to 2017 here, and all the moves up and down are now showing relative to their percentage movement. If I remove log, the chart looks a lot different. That's because now you're seeing those exponential moves, but you're not seeing the relative, like a 10% move here looks a lot bigger than a 10% move here because the prices were so different. So when we go to log, everything kind of evens out with those percentage moves. So I want you to focus on this area, all right? I'm gonna zoom into it so you can see a little bit better. This is the entire run we have seen since March of 2020 last year. March 2020 is right there, and I'm gonna turn on regression lines. So these regression lines are basically giving us a view of this market with standard deviations. And some of these standard deviations, once we get up here, I've modified them very slightly to hit the peaks and the valleys. So if necessary, I mean, I could move this down a little bit more. You'll see that there's a little bit bigger of a gap here. And the reason I put that there is because we had a bigger move up here, and I wanted to represent this channel as a bigger area where we may continue trading. So because we know the top was a lot smaller. So sometimes regression lines can be adjusted this way. This is just the way I decided to do it. And what we're going to do now is we're going to take a look at what this is showing us. All right, so let's see if we can zoom in a little bit so you can see it a bit better. Okay, so when you look at this, you'll see that we have a number of areas here. We basically have 1, 2, 3, 4 channels inside this regression. Now, in this top channel here, okay, we are seeing that this is basically throughout this bull run, this has been our complete peak. And we can consider this the area that we were overextended in. And this is why we had the least amount of trading in this area. We came up, we hit multiple tops here, and we fell below it. This bottom area is where we had the March crash, and we had our bottoms throughout the bull run. And you can see in this bottom area, we have basically held support at this main line down here. That is where we hit right now with this drop, and both of the wicks that we hit this line at 2 different points and maintained the uptrend. We are now getting resistance at the next channel. We are hitting that resistance and we are trying to break above it. So big thing to see here is that the price breaks above this regression line, once again taking us into 42, 43,000, and then we're going to want to see some trading in this regression line. This can take us all the way up to 55K while we're in this regression line. So when we break out of this bottom channel, and keep in mind, the last time we came down here, we were here for quite a while. When we break out of this bottom channel, I want to see us in the above channel in the 40 to 50Ks for a good amount of time. It might even be an entire month that we're trading between 40 to 50K. It could be even longer until we really break out into this regression line. Because you keep in mind, as time goes on, all right, once we get into August, this regression area is now at 64, 65K. It peaks at 70K in August. And then this area here turns into 80 to 100K. So it's a very big possibility that trading moves something like this. We could even hit resistance there, come back to about 34, 36, keep trading here, move into this area, taking us in a huge spike up to 64, 65, trading in this range, and then breaking out to 80 to 100. Seeing a move like this on the log chart, when we look at it at a longer time frame, it would not be surprising. It would be a lot like this move here. It would be a long, slow run, but we would have some major movement come August and September. Even by the end of July, we would be starting to hit peaks that take us back to where we were. That gives us about 2.5 to 3 months to consolidate out of this range and maintain an uptrend. So something like this is very feasible. I don't hear a lot of people talking about this because when I go on to a lot of people's Twitter and stuff like that, everyone's either really bullish or really bearish. And what they don't realize is you don't have to be either, because inside of a pattern like this, it maintains the log trend. It puts in volume in all these regression channels that we know we're trading in now. And on top of that, it overall ends up moving in the same uptrend that we're seeing. You have bearish moments in here, you have bullish moments in here. This makes a lot of sense. So seeing something like this, very, very possible. I'm gonna move this into the regression folder. So this is part of our regression chart that we can keep looking at. So keep in mind, something like this is not out of the question, and that means that for a little while you may deal with a little euphoria, and then you may deal with a drop that makes you feel a lot of fear again. So anything could happen, but I think that this is a great way to look at it, and this is something that we're going to have to keep an eye on. All right, let's move on to Glassnode. Well, actually, right before we move on to Glassnode, I want to show you a couple more things. These are just very tiny indicators. All right, so we're going to move out of the log chart. We are going to take our regression lines and we're going to turn them off. We're going to go back into our Fibonacci. So I want you to see these fibs very briefly. This was our medium-term Fibonacci. This is the one where we started it at around 15,000 when we had that first pump up, and then we hit a local low. So we started this one there, and you'll see that on this one, our golden pocket was sitting between 33,000 and 34,800, and here is that golden pocket. Everyone was freaking out when we dipped below it, but I said, hey, you know what? Even if we dip below it and wick, it's not a big deal. Sorry for my cat. She is making a lot of noise. Jazzy, you gotta chill, girl. Come here. Here, say hi to everybody. All right, here's Jazzy to give you your little TA break. Good job, Jazz. You're a star. You're a star, Jazzy. I'm a star. All right, come on. So we saw that a lot of people were really scared when we dropped below these levels. There's a reason you were really scared, because this golden pocket was meant to hold support. This was the last area of trading that we broke out of. But keep in mind, we didn't do a ton of trading here. So now that we're trading here, it's not the worst thing in the world. I mean, I like to see trading here, but I do like to see not only support being hit, on top of this, I love to see the fact that almost all the trading that was done within the golden pocket was bought up very quickly. And then after these big buy-ups after these wicks at the golden pocket, pretty much 4 daily wicks, 1 day, 2 day, 3 day, 4 day, 5 days of trading, all were bought up through this golden pocket range. Even when it fell below, it was all bought up very fast. Then we started putting in support. We had this one major candle that put in support when Michael Saylor and Elon Musk put out their information about talking to miners and all that stuff about energy usage. Like that overall, I don't know why people are freaking out about that. They suddenly think everything's centralized. No, it's not. These are people that are trying to show the energy, maximalists that Bitcoin can not only be renewable, but it can be transparent enough to show you that it is. So you don't have to believe all the FUD, believe the people that are actually mining. And then on top of that, if at some point Tesla and Elon Musk are going to release technology that can help make mining gear more sustainable using better types of energy, then he needs to at least be talking to these people to know what it is that Tesla needs to develop to help them, get better energy into the Bitcoin mining network. So I don't think this is a bad thing. The fact of the matter is that, just pivoting a little bit to that topic, is that, the fact is that Bitcoin's decentralized. So do people have to listen? No. They don't have to. It's not like this mining council is an actual council of elders and they're going to start making all the decisions. No. They are likely just going to come up with the best ideas and show what's happening, where things can be improved, and then suggest those improvements. Whether or not people make them, that's up to them. I don't think we're going to see anything else come out of this, except it's going to be some positive news in an area that's been flooded with FUD. So I think people that are taking this as, oh, this is terrible for Bitcoin, this is terrible, everything has to be completely decentralized, they're living in a fantasy world. When something gets this big, you need people talking about ways to improve it. That doesn't mean they force those upon you. If that starts to happen, that's a bad thing. But for now, there's nothing bad about it. We just be cautious and we try to see the positive. Everyone immediately jumps to the negative. I think that's a terrible thing to do. If anything, I was stoked about that. I think that it would help people who are facing this crazy energy FUD and not doing any of the research themselves. This may give them a little bit more of a positive tone. So anyways, when we go back to the golden pocket, we see that everything was bought up. Then we see that we flipped the top of the golden pocket into support. Now we're trading above it. Unfortunately, we're still in a downtrend. So if we come back into the golden pocket, I want to see the same thing. I want to see either support or I want to see it being bought up. The bottom of the golden pocket is around 33,000. So ideally, we don't fall below that and we maintain a larger uptrend from this bottom. So seeing a lot of sideways trading here for the remainder of the month, I'm fine with that. Seeing a drop back down to 35K and then bouncing off the golden pocket, I'm fine with that. Seeing a drop down to 29K or 30K again, I don't really like that very much. That's when I would be thinking that, okay, a lot more downside's possible. So right now, this is all looking okay to me. I wouldn't be super worried about it. Now we switch over to the larger Fibonacci, all right? Remember, this Fibonacci has a bottom, a local low of about 15K. It's a fairly long-term one. The local low here is in November of 2020. Now we're going to switch to our longer-term Fibonacci, all right? So this longer-term one goes all the way back to the March crash. That's where our low is marked. So we'll remove this, we'll turn this one on. So you'll see that this takes us from the low in March all the way to our all-time high. We see the overall trend and we get the Fibonacci support and resistance lines in our chart. One thing that you'll see here is that we have a golden pocket sitting at the 25.3 to 27.289 level. So that's 25K to about 27K. That's where this golden pocket sits. We have not hit it yet. It is still possible that if we fall through this area, we can hit it. Now, the interesting thing is in this Fibonacci, you'll see that this green line here, this is our, let's zoom out. This is our 0.5 line. It sits at 34,500. Now, if we look at this 0.5 line, what you're seeing is this basically represents that medium-term golden pocket. We're hitting resistance on it, or I'm sorry, we dropped below it, we went back above it, we hit resistance at the line above it, and now we're trading within it. We need to hold this line, right? If we fall below this, this is once again at around the 34.5 level. If we fall below that, then coming down and touching the 26 level is not out of the question. If we maintain the uptrend, then maybe it won't happen. But this is something you need to be prepared for. This could happen. We have not seen enough bullish momentum yet to show us that this is not a possibility. It's definitely a possibility. So we have to see how things work out. We have to keep an eye on it. The good things that you see on the daily chart are here. So if we take this indicator here, this is called the market cipher. This basically, I don't use it for trading. A lot of people do use it for trading. I don't use it for that. I use market cipher to check momentum because that's really what it is. It's a momentum indicator that gives you buy and sell signals. So if you're using it for trading, that's up to you. But I use it to look at the momentum. And what I see on the daily chart now is that it went down to some of the lowest levels that it had ever gone down, if you look at the bottom here, and the momentum is starting to flip. We had a buy signal. Now, a buy signal down at these green lines here, this is rare. So let's zoom out. So if we look at this, you'll see on this chart, if we go backwards, you see we had a buy signal within these green lines, actually at the bottom of this. Even the last one wasn't. Then we go back to March 2020. That's when we had a buy signal right below, and that's what kicked off this entire bull run. So this is the first time we have had a buy signal come in anywhere near where the March 2020 buy signal came in. I think that's pretty indicative that, this correction could have hit its bottom, right? Could this flip to a sell signal and then we go down further? It's possible, but it just seems unlikely because we are still within a bull run and these prices right now are very, very promising. people are getting in and they're buying big, and sell pressure is starting to reduce. So this is a good indicator. It's called Market Cipher. The one it is Market Cipher B, free version with buy and sell. I personally don't use it to buy and sell. I use it more to look for momentum. I choose my buy and sell targets by doing my own analysis. Okay, so we're going to close out of this. The other thing that you see on the daily is the RSI is very low still. It's sitting at the 32 level. It's a little bit over the oversold line, but it is still very close to oversold. I mean, even a little bit of a drop back to 33K will make it oversold again. So we are still at a level where all the indicators are telling us that this is a great buying point, but we still have to manage risk because it could continue going down. We just have to be we just have to be cautious until we see that move up to like 45. So that's pretty much it for the chart. Let's move on to Glassnode for a little while. All right. So with Glassnode, we're gonna look at some interesting information. So the first thing we see here are addresses with a non-zero balance. You'll see that during the dip that went down, and now it's starting to go back up. I'm gonna zoom in to a better time frame here. We're gonna move forward. We'll basically do this entire run. So where am I going? I'm all the way in. Okay, let's go to January 2020. Okay, and we will go all the way to May 24th, to yesterday. So this is basically the, hang on, let me switch over to full screen so you can see this better. Okay, so this here at the left is basically when we had the March drop. Since then, you'll see that the addresses with non-zero balance has been completely moving upwards. It spiked when we had this massive run all the way up to 65K. Then we had a drop, which is telling us that a lot of addresses went back to a zero balance, and now we are starting to see a spike again going up. And you see it spiked and at 30K, and then it dipped again, and now it's moving back in kind of a sideways pattern, could be going back up. I expect that as the price recovers, this is going to keep moving up, and eventually, like we've seen in this giant bull phase, the price stayed significantly above this line. I think the same thing's going to happen. I think this line will start hitting the 60K level, and then the price is going to spike up to like 80 to 100K and be significantly above the line. And I don't know how far it's going to go, but I think we're going to be hitting some highs that people aren't even considering this year. And that's probably when we're going to peak out the bull market. So let's look a little bit more. We're looking at my favorites now, and we'll see some of the ones that I like to look at. If we look at addresses with a balance of greater than 0.1 Bitcoin, you'll see something very similar. During the peak, it dropped a little bit, and now we're trading sideways, meaning that people are accumulating during this phase. We haven't seen a major drop in the people that are buying at least 0.1 Bitcoin. Once we go to the addresses with greater than or equal to 1 Bitcoin, you'll see that there are a lot of people selling the top. A lot of people with more than 1 Bitcoin sold, and a lot of speculators sold. So you saw a ton of drops here. It has started to spike back up now during this drop. So if we zoom into this area, you'll see that once we hit the bottom, these numbers started going back up again, and that is a good thing to see. All right, let's move back to January of 2020 to this time frame. So I want to be on this larger time frame. Okay, so now we're going to look at the exchange inflow. This is very interesting. So you'll see here that the amount of Bitcoin on exchanges, all right, that amount of Bitcoin hit a peak that was the highest that we've seen since the March crash. It was a massive amount of Bitcoin that went onto exchanges, and basically then we started seeing that stop happening when we hit the bottom at 30K. We've had a little bit of a spike on this again yesterday on the 24th, and that could mean that people are still a little concerned. All right, let's move on to a shorter time frame here. We'll ignore everything in the past. We'll start at January of 2021. This will give us, January 2021, we will move to this frame. So you'll see here, if we look from January to now, so this is the year of 2021, you'll see that we had these massive inflows of Bitcoin to exchanges. Then we had the crash, which is where they dumped, and we had cascading liquidations happen because of that, pushing the price down even lower. And then once we hit that, bottom level, the inflow it started going up again slightly, but it had really dropped. So yesterday we did have a little bit of an increase. The bottom was around, on May 22nd, it had gone back down to around 57,400 inflow. And now yesterday, it's up to 78,000. So there was some more coming onto exchanges yesterday. And that could be accounting for some of this drop, right? People saw the price go up to 40K. they're like, okay, I'm still scared. I want to take some profits. They put money onto exchanges and it dropped. We didn't see a massive spike, so that's a good sign, right? It's still pretty high comparatively to the rest of this run, which makes sense. This always happens when the price drops. People get scared and they put their money back on exchanges. Now we're going to look at the exchange outflow. The exchange outflow is showing us something very similar. We had a huge spike during the drop of Bitcoin leaving exchanges. Then we had a massive drop, and now we're seeing a spike again. So people had been buying. So we had a drop on May 22nd, about 2-3 days ago. And now yesterday we had a huge spike. So the drop was down to 51,500 Bitcoin, right? The peak of Bitcoin leaving had gone all the way up to almost 150,000 Bitcoin, 148,200 Bitcoin exiting exchanges. Then we came back down to about 51,000, and now yesterday we went back up to 95,000. So just in the last couple of days, we've seen another huge spike. I mean, comparatively from 2021, it's pretty high. It is the highest out of all the peak points, except for this bottom here and this top here when we had the crash just a couple days ago, or about a week ago. So now we are seeing that a lot of Bitcoin is exiting exchanges, and that number is far higher than the amount of Bitcoin going onto exchanges, which tells me that you have a lot more people accumulating than the people that are dropping. Pretty interesting, very interesting stuff. There's a lot more stuff we could look at here, but what I really, really think is the most important thing is that people realize that whatever charts you're looking at, you got to understand when sentiment is changing, and I think we're starting to see that. So we saw during the crash, this is the adjusted SOPR. The SOPR is basically, it's the spend output profit ratio, and basically what that is telling us is of all the Bitcoin that's being sold, or is it taking a profit, right? So basically, when we drop below this zero level, it shows us here that the majority of people selling right here were selling at a loss. And now over the last 2 days, this has started to go back up. This means a lot of people bought this dip. It's starting to go back, and now you're seeing some people that are going to be in profits if they spend. A lot of people that are spending are in profit again. So it could be people that bought at 30K, maybe they're selling off here at 38K to take some profits to offset their risk. You don't really know, but seeing this number start rising again is a good sign. It means that things are moving well, but seeing another dip and then this going back to the zero level is definitely a possibility. Keep something in mind when we look at this long term. All right, I'm gonna move this back now to January of last year, 2020, all the way until today. If we look at this line has been a pretty good indicator of a bottom. When we start hitting that zero level, you start to see things start adjusting back. Here we went below it, now we're back above it. Wouldn't shock me if we come back down and touch it, and then we move up. All right, that is pretty much it for Bitcoin. A lot of this information is going to be very important this week, I think. I think it's going to give you a realistic view of the market, and that is the goal. All right, let's move on very quickly to the other assets. A lot of people come here for Ethereum, EGLD, and ADA, so I'm going to take a very brief and quick look at those. To be honest with you, I'm not super concerned about any of them right now because they're all going to follow what Bitcoin's doing. Ethereum is the only one that's somewhat deviated a bit, but EGLD and ADA are still very much following Bitcoin. So let's take a look at actually all of them are, even Ethereum is. So if Bitcoin drops again, it wouldn't shock me to see a huge drop with Ethereum. So Ethereum looking very, very similar to everything that we've seen. If we look at this short-term Fibonacci, you can see that we drop below that short-term golden pocket. So we'll get rid of the short-term. We'll go to this longer-term one, and we'll turn it on. Okay, so, oh, you know what? I'm in the wrong Ethereum chart, aren't I? Yeah, okay. So let's load. Oh, no, that is my ETH chart. Okay, so I haven't done the longer-term fibs, so let's go ahead and create one real quick so we can take a look at where it tells us that golden pocket is and how accurate it was. So we're going to get rid of the TD sequential. We don't need that right now. And we'll get rid of the moving averages to make this a little clearer. I'm going to use this bottom here. This was February in 2021. Let's actually go back even further. Let's go back to right before this massive run started to this drop. This was December. Let's take this and take it all the way up to the peak. Okay, if we take this and go all the way up to the peak. Okay, so this is an old fib. It doesn't have my golden pocket drawn in. So hang on a sec. Let me grab one of my Fibonacci's that has my golden pocket. I'll paste that into here. We'll switch this to a 1-day chart. And I'm going to get this drawn out for you. Okay, let's go. Okay, this is going a lot further. Let's go over to the monthly. Okay, so if we go to the weekly, we can see this a little bit better. We are going to take this and we are going to really switch the time frame. All right, so we're going to go to where all of this movement is. I'm going to take it down to this bottom. We're going to shorten this big time, and now we're going to switch back to our daily chart. So if we go back to this daily chart now, we are going to adjust this Fibonacci, and we're going to see where is the golden pocket. All right, so I'm going to take this down to, let's actually take it to the March 2020 bottom, since that's how we've been watching everything. If we take that down to the March 2020 bottom, and then we put this at the top, what you'll see here is that this Fibonacci starts to look very, very interesting. All right, so we've done that. We're locking it in place. Now, if you look at this Fibonacci, look what's happening. We peaked out, we were overextended, we dropped down, and we bounced right off of the golden pocket. That's a great sign. So even though Ethereum is scary right now with all the price fluctuations, this was a massively amazing movement that we saw in this long-term historical Fibonacci chart. We saw a clear bounce right off of the top of this golden pocket. We saw resistance at this line here at 2,700. We came back down and got support at 2,200, and now we're still trading in this channel, even though this overall is still in a downtrend due to what's happening with Bitcoin and the overall crypto markets. As far as technicals go, this is really promising. I think it's a great sign. The key is to hold above 1722. That's what you really want to see if you're in this for Ethereum. And I think we're going to have some time to see what really happens, because while it's so correlated with Bitcoin, while the whole markets are, you're not going to get a lot of information from analyzing these charts individually. Moving on to EGLD. All right, with EGLD, we are also seeing a lot of similar price movement to Bitcoin. We see that we fell way below this shorter term Fibonacci retracement. If we do the same thing and we switch over to our weekly chart, what you'll see here is that this Fibonacci actually goes to a much lower level. I'm taking this all the way back to October. If we were to take this back to March, we would see something very different. So let's do the same thing, all right? We're going to take this Fibonacci, we are going to clone it, and then we're gonna take one of them and we're gonna hide it. So now what we'll do is we will take this and we're gonna move this back to March 2020. All right, let's zoom in so we can see that price movement, and we'll basically go right to the lowest point here, okay? So this is basically the lowest point for EGLD. This is a huge, huge chart for EGLD, but you start to see when you create these long Fibonacci retracements, we can get rid of these for now. These will come back when we go back into the 150 to 200 range, see if we hit the same support and resistance in those channels. But when you look at it this way, you start to see something very interesting across all these charts. You start to see that these long-term Fibonacci retracements are exactly where we came back and touched. All right, we came back, we fell below it, we came back above it, we're getting support on top of it. These long-term fibs are pretty accurate to show us an area of importance. This is clearly an area of importance, and it is marked out in the area that we've seen the most volume by that long-term fib. Similar to ETH and to Bitcoin, EGLD needs to stay above this level. This is about $88. So if it goes below that, this is what you want to see. You want to see it get bought up and come back above and get support at this level. Now, the thing I don't like when I look at the EGLD chart right now is when we took this second drop, we dropped below the first drop. We didn't put in a lower high. We put in a lower low. That's not a great sign. That shows that it got overextended to the downside. I like to see this here. This line shows that each time it went to or below this level of the first drop at 70, it was bought up rather quickly. That's a good thing. But seeing this dip all the way to 65 shows the amount of fear that sits in altcoins right now. Bitcoin didn't do that. Bitcoin barely made it to the same level and made it back up. So I would be weary of all altcoins right now because they are all doing similar things. And if Bitcoin has another crash, these could fall pretty hard. We don't know exactly how hard, but they could fall pretty hard. That goes for, Polkadot, Cake, Atom, the meme coins, even Matic, to be honest. So all these altcoins are going to see a lot more volatility even when Bitcoin shows a lot of volatility. And you've seen that over the course of the week, so you're probably already ready for that. As far as EGLD long term, I still think it's a great project. I still think that they have a lot of promise. They've built a great foundation, a great architecture. They have a lot of good partners. And I think things are going to keep moving as we get back into a more bullish phase of the bull run. So as that happens, I expect to see not only going back to similar highs that we had, but I expect us to break those highs. So this in the long term could turn out to be a great thing. It may get a lot of new investors in at these lower levels, and that could only really help EGLD in the long term because you want more people coming in. The people who sold here already knew about EGLD. So if it starts doing well again, a lot of these people are going to come back. But now you have a lot of people down here that are also going to come back when it starts going up. So exposure is pretty big, and seeing assets that recover strongly from market crashes like this really give them a lot of strength. So I want to see a strong recovery over the next couple of months back up to like the 240, 250 level. So that's really going to be key. We have a lot of resistance ahead of us at around, starting from 140 all the way up to 200. So it's going to likely be a good amount of trading in this area. It may not be until June or July that we start seeing newer highs or even the highs we saw previously. So get ready for a little bit of a long-term move here. Now, if Bitcoin takes a massive move back up to 70K, then yeah, I think EGLD is just going to spike in volume very quickly. But on the realistic side, I think it's going to take time. All right. I think it's a wonderful buying opportunity. I actually filled up my bags at around 110, so I'm a little down on that, but I also then added more when it was down to around 70, 75, like in that range. So I have been reducing my cost basis the entire time the price has been down, and that's really been great for me. I mean, my cost basis was already pretty low because I bought this pretty low, but still, anything that I bought in this area, I want to reduce my cost basis. It's an asset that I plan to be in long term. Right or wrong about the future of it, I think it has promise, and sometimes you got to go with the assets that you think have promise, and I think this one does. Okay, so we'll move on to Cardano. Cardano also, like everything else, has been trading in this golden pocket range. This is more short term. We take this and we take it to a longer term local low, and you'll see that even this one at this longer term hit that area of the golden pocket. Now, we could take this a lot longer term because this is at only 18 cents here. This was down much lower before, but it was very steady at this like 7-8 cents level. So if we go back this far to like 7-8 cents, then you can see from here, a much longer term Fibonacci, even for Cardano, shows that it bounced off the golden pocket. So the golden pocket area, very, very interesting. I mean, sometimes even during bull runs, you create these long-term golden pockets or long-term fibs, and then you could just put a buy order in a little bit above the golden pocket. If you had done this when we were at the peak at around 240, you would have been able to buy Cardano when it dropped down to $1 or a little bit lower than $1. So it's always a good thing to have these. I always keep them on my charts. I look at them here and there, but anticipating a 50% move is difficult. So now we'll start looking at these a little bit more frequently just to kind of prepare ourselves, but this is a good thing to remember. This can go either way. All right. That's about it, you guys. I hope you enjoyed this. I'm sorry I didn't do a live stream today. The reason being I wanted to focus strictly on technical analysis. I do not have time to answer any questions today. I got to get right back to work after I upload this video. So I hope you enjoyed it. I hope this gives you a little bit of information of where my head's at. I am just managing risk right now. That's the main thing to be doing. I have all the risk exposure I want, and I'm making sure that I have an idea of where things are going to go, so I'm mentally prepared. I'm mentally prepared for the upside. I'm mentally prepared for the downside. That's very important. That is how I avoid getting into a lot of fear and doing stupid things. I already have decisions for what I'm going to do if I see the price drop down to 26. I have decisions of what I'm going to do if I see the price go up to 48. It's just very interesting. You know, you have to keep an eye on these things and come up with strategies, come up with plans. Otherwise, you see a massive drop and you're not ready for it. You don't have any plan. Even if your plan is, I'm going to hold, I'm not selling, that's fine, but have that plan. So that way you know that if it drops down, you start seeing this, you don't let the fear overtake you. Even if your plan is, hey, if I see any more of a drop below 30K on Bitcoin, I'm going to de-risk by selling a few other things and moving back into fiat until I know which way the market's going. That's fine too. You can do whatever you want, but you have to come up with a strategy. Come up with a strategy and be ready for both sides of the field. You know, that's going to help you out. The people that don't let fear control them are the smartest ones in this market. And remember, fear is the price that you pay. Fear and volatility. So volatility followed by fear. That is the price you pay in crypto for the massive returns long term if you're in the right assets. Make sure you're in the right assets. Do your homework. Get ready for volatility because it's always going to be here. And get ready to be rewarded if you've made the right moves. Peace out. I hope you have a wonderful day. Leave questions in the comments. Like and subscribe to the channel. Like the video, subscribe to the channel. Check out my Twitter and Twitch. All that stuff's in the description. I will see you guys in a day or two or on Twitter. All my updates. I do chart updates and stuff on Twitter all the time. So if you want more frequent updates, follow me there. This is going to get uploaded now. I will catch you later. Have a wonderful day.